Today, we're diving deep into SoFi's latest developments and what they mean for investors. In this video, we'll dissect the recent performance of SoFi, explore the latest updates from the Goldman Sachs Tech Conference, and review key market metrics that might impact your investment decisions. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. To kick things off, SoFi experienced a modest gain of 1% today, though it was quite volatile. The stock opened with a low of 7.01 cents and saw a rebound, reaching a high of 7.21. Trading volume was relatively low, with 32.9 million shares exchanged compared to the average of 42.8 million. There hasn't been any official news directly from SoFi, but the company was part of the Goldman Sachs Tech Conference today. I've uploaded the full, unedited footage of the conference on my channel if you're interested in watching it as it happened. From the conference, there are a couple of key takeaways. First, SoFi CEO Anthony Noto mentioned that the company aims to stay among the top 25 for highest annual percentage yields, APY. However, with potential rate cuts on the horizon, possibly as soon as next week, SoFi might need to adjust its offerings. Despite a recent cut of 10 basis points, SoFi is still seeing strong positive feedback, suggesting an increase in membership growth. If you recall from my earlier video, SoFi's web traffic is at record highs, which often correlates with increased member growth, indicating strong performance. Another notable announcement was the introduction of a new feature called Cash Coach. Noto shared that the app provided a recommendation to move funds to pay off a credit card balance, showcasing SoFi's innovative approach to personal finance management. This feature exemplifies how SoFi integrates technology to enhance user experience and could set them apart from competitors. Shifting to short interest, there has been a noticeable increase. Currently, 1.4 million shares are shorted, representing 17.89% of the free float, which amounts to 187.29 million shares. The utilization rate stands at 44.96%, with a short score of 69.26 and an average cost to borrow of 0.94%. Yesterday, I discussed the situation of shares on loan, which is at 179.8 million, compared to 187 million shares being shorted. This discrepancy suggests the possibility of naked shorting. Although this might sound like a speculative concern, it's worth noting that naked shorting can occur due to various factors, including synthetic securities, ETFs, and options activity. It's important to understand these dynamics, but not necessarily a reason to panic or sell SoFi stock. Looking at the options market, there were 3.38 million call options and 2.6 million put options traded today. Of the total options activity, 65% were bullish, though some of this might be short hedging, especially with an increase of 1 million shares. The consensus among the call options is targeting a price around $8 by the end of this week. Historically, the closest strike prices, such as $7.50, represent hedging activity, while those outside this range indicate genuine optimism. The data shows renewed optimism in SoFi, which is a positive sign. During Q2, hedge funds purchased 26 million call options, marking a 27.74% increase from the previous quarter. In total, all 13 filers acquired 93.7 million call options, a 14.13% increase from the previous quarter. This suggests institutional investors are bullish on SoFi, seeing potential upside. Despite some selling activity, the general trend indicates confidence in SoFi's future prospects. There has been significant selling in transactions above $100,000, contributing to a recent downtrend. These transactions, particularly in the dark pool market, are linked to large entities and shorting activities. For those interested in detailed transaction data, you can review it on the screen. As of today, SoFi stock closed at $7.08, trading between the strong support level at $6.56 and the resistance at $7.43. On the 4-hour chart, the closer support and resistance points are around $6.90 and $7.28 respectively. Despite today's fluctuations, SoFi managed to hold on to its 50-day moving average, a critical technical level. As mentioned in previous videos, today was crucial for SoFi's technical indicators. If SoFi can maintain this support and show recovery, it could signal a positive shift moving forward. The stochastic indicator shows an oversold condition at 24, suggesting that any positive news could trigger a surge of interest from value investors. Although the fireside chat did not have the expected impact, broader market fears still persist. The Fear and Greed Index remains in the fear category, and upcoming economic reports, including CPI and PPI, will likely influence market sentiment and interest rates. Retail investor activity shows a trend of selling, which could be due to anticipation of further downside or general frustration. I'm curious about your thoughts on this. Are you selling due to concerns about SoFi's performance, or do you have other reasons? Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.